Hello, class. Good evening. Good evening, class. Confirm if you can hear me.
Yes,
Yes,
we can. Good evening,
fine.
sir.
Good evening.
Okay.
I can hear you.
Good evening, sir.
Good evening. Good evening. Allow me. We're not in my last class. So,
Uh,
okay. So let me just do a quick review of some important things that we discussed in our last class. Right. So still on the capital rationing. You could remember I said that capital rationing is from asset is cost towards liability plus equity, right? That being said, we also talked about we also talked about that the main thing as regards our investment at all time is centered on the assets, right? So it is this asset that we want to invest on. The investment opportunity that we've seen, it is these assets, right? So total assets, are you getting it? So from here, you can either fund this investment that you've seen through liability or what? Or equity. Or what? Equity. So if you fund it, let me just abandon this now. So, or through equity, do you get it? So this is the funding part, the capital part, while this is the investment part. So we talked about that one in our last class. And we said that it is because this our funding, this our capital is what is limited. That is why we have to what? We have to ration our investment opportunity. Had it been that we've had our capital in abundance, then we don't need to ration anything. So that is not going to tell you that capital rationing happens when a company has limited funds, right? It has a what? A limited fund. So it is this limited fund that usually cost what CR, which is capital rationing. Please note that. We also said that we also said that um, we have types of capital rationing and we have reasons of what of capital rationing. So in our last class, I could remember I said that the types is what can be hard or what soft. And I also said that if you look at the definition of hard, so hard, I told you to liken it with guys, right? So hard deals with what external reasons, right? External reasons, and soft deals with what internal reasons, right? So hard capital rationing occurs when funds can be raised due to what external reasons like what inflation, lending rate limits, and whatnot. And we conclude that this hard and soft, there are our reasons. There are our reasons, right? Because we said that hard is when you actually limit your fundraising due to external reasons. So it is actually reason. So that was why we actually concluded that okay, we should make hard and soft the reasons, and we should not make our types to be what single and what and multi-period, single period and what and multi-period. And we gave steps as regards single and what and multi-period uh, capital rationing. So that was where we stopped. Guys, can you still hear me? If someone
Yes,
should confirm.
yes, sir. I can still hear
Yes,
you.
yes. Yes,
Okay,
sir, we
good.
are hearing you, sir.
Okay. Okay. So I also talked about steps because I said that this multi you'll be using. Do I need to ask someone? I'm sorry. So this, so coming, let me just put it here. Okay. So sorry. So this multi, you'll be using linear programming, and that's not our focus, right? That's not our focus. Our focus is just going to center of single, right? It's going to center of a single period, uh, single period, right? So single period capital rationing. So that is, and I gave you steps in calculating this single period as well. So one of the first one is to identify the year of registration. The first one is to identify the year of registration, then calculate LPV if not given. Then rank all the projects using profitability index. Class, don't forget your profitability index. You've been taught this thing from your primary school days. Your profitability index is what is equals to MPV. MPV over what? Over initial outlay. Over initial outlay. Right? So we've done all these things in our last class. I'm just trying to recap. So where we stopped, right? So someone should do and thought the steps in solving single periods to the group is. So where we stopped was um where we're talking about divisible projects, divisible projects, independent projects, independent projects, mutually exclusive, right? Mutually exclusive and mutually dependent, right? Mutually dependent. Where class, if you were here in my last class, let's quickly provide answers to all this. So we'll start from divisible projects. What are divisible projects? So divisible projects are projects. Oh yeah,
That can be done separately.
that can be done separately. Is that it? That's not the keyword. Divisible projects.
Divisible projects are
Project that can be
that can
accomplished in stages.
In
at once.
stages, fantastic,
Stage.
fantastic. So
Okay.
that can be accomplished in what? In stages. Are you getting it? So you have to do stage one before you go to stage two, before you go to stage three, right? So you have to do this before you do this like that. So in stages, fantastic. So independent,
They are standalone projects.
fantastic, fantastic. Standalone projects. So standalone. That's the keyword. So see, it is important that you know all these things because when you begin to solve questions now, question might say the projects are mutually exclusive. So when you are ranking, that is where the problem now lies. If you did not understand all these guys here. Now, so mutually exclusive, please.
Projects that can be done together.
Can't be done together. Awesome. Can't be what? Why are you crying? F can't be done together. That was here. So can't be done together. Then the last one, please. Mutually dependent. Mutual dependence on each other. Oh yeah. Oh yeah now.
They are projects that must be
What you say?
executed together. They are projects that must be executed together.
Must be thank you very much. Must be executed right together. Fantastic. Fantastic. So that's it. That's it. So for divisible projects, I'm taking it from here again. So a project that can be accepted in parts, right? Not as a whole. It can only be accepted in parts, in stages, in parts, in stages, right? I hope you get it now. Hello, class. Do you know this? I've done stages, not in parts, not as a whole. So that being said, as um, you see, so projects. So independent projects, the acceptance of one hmm, does not affect the decision of the other. Hmm? So they are standalone. Wetin concern me no concern you. Are you getting it? So independence. So if a company invests in a new delivery van, like in an asset, motor or machine, and also decide to build a probably a staff quarter, are you getting it? So both can be done because the decision to buy staff bus should not disturb the building of what? Staff quarters. So they are both standalone. So if they are standalone like the effect of this one is not going to be on the other one. So if it is like that, that means they are standalone. That means they are independent. Are you getting it now? So if a company invests or wants to invest in buying of, let's say, delivery van, are you getting a delivery van or a machine, right? And also decide to build staff quarters. So they both can actually be actualized because they are not in any way similar and they don't depend on what each other. They don't depend on what each other. So that means they are what? They are standalone. So that is independent. The next one, which is mutually exclusive. So choosing one will automatically rule out the other. Choosing one, so a project is said to be mutually exclusive if one is going to what affect the other, right? You cannot do both of them, right? A company wants to build either a factory in Lagos or factory in Abuja. It means that if they actualize that of Abuja, that of Lagos will not hold, right? So doing both would duplicate the purpose. So any projects that behave like that is said to be what? Mutually exclusive. Mutually what? Exclusive. Ah, so the last one is mutually dependent. Two projects are better when taken together. The benefits of one increases with the other, right? So they both must be what? Executed together. So as you're having bread, you should have what? Butter, right? As you're having bread, you should have what? Beans. So you cannot get a car without what? Petrol. So they are mutually dependent on each other. Are you getting it now? So a project, two projects are better when taken together. So if they behave like that, that means they are what? Mutually dependent. So if a company set up a mobile app now, right, and also develop e-payment platform. So you are setting a mobile app without the e-payment platform system. That means you are just joking. So it is going to make sense if you set up the mobile app and also what? Develop the e-payment platform with it. Are you getting it now? So each project is more valuable because the other what actually exists in it. So rather than just providing that what mobile app, fintech app without imagine OP launching their app without what? Without the services of what transferring, right? Without the services of what e-payment system. It will not make sense. You only develop the app called OP without what onboarding or developing with it an e-payment platform. So it will not make sense. So for you to make sense of what you've developed as an app, as a fintech app, then you should include what? E-payment system. Does that make sense, class? Class, does that make sense?
Yes,
Hello.
please.
Yes.
I think I've
Yes,
not been
sir.
speaking to myself
Yes.
since.
No,
So,
sir. We are with you.
mhm. So we want to delve into the the question that we dropped on the group. So I hope you all have the question. Please, someone should forward the question so that we can be on the same page. So we've talked about mutually exclusive, we've talked about divisible projects, we've talked about indivisible projects. So it's going to be opposite of divisible, right? So yeah, please read the question, AOP question. It's a very long question, so I hope you can actually finish solving it tonight. Yeah, guys, who is reading? Gift, are you here?
OAP, ba?
Yes,
Yes.
I'm here.
Okay, please, Gift,
Please, sorry, sir. Please, can someone help forward the question
please forward the
to the
question
group?
again. He's on the group already, actually, but I don't know. Let me comment on it. It's on the group. I sent it. I have 5 pages like that. So this is it. Is the question. So this is the question. Gift, have you seen it? If you have seen it, please read.
Okay, sir. All right, I read.
Okay.
OAP Co. The board of OAP Co. has decided to limit investment funds to $10 million for the next year, and it's preparing its capital budget. The company is considering 5 projects as follows. We have the initial investment and net present value. Project A, 2.5 million. The net present value is 1 million. Project B, $2.2 million. The net present value is 1,150,000. Project C, 2,600,000. Net present value 1,350,000. Project D, 1.9 million. Net present value for it is 1.5 million. Project E, 5 million. We are to prepare the net present value for project E.
Okay.
Further
So
information.
okay, can you
Okay.
pause it? Okay.
Uh,
So
all
that
right.
project E, the present value, the net present value is not given, right?
Yes.
So that means it's a signal that it's one of the things that we are going to work with. So you may proceed. You may proceed. So you have information as regards the 5 projects. So are they divisible? Are they mutually exclusive? So we are going to know that. We are going to know about
All right. So all 5 projects have
that
the
in
project.
this next paragraph. Read please.
Can I continue? All 5 projects have a project life of 4 years.
Yes, please. All 5
Project
projects.
A,
Okay.
B, C, and D have a project life of 4 years. Project A,
Okay.
B, C, and D are
Okay.
divisible,
Continue.
and projects B and D are mutually exclusive. All net,
Okay. Pause.
okay.
Pause now. So okay. So it said that projects A, B, C, and D are what? Are divisible. So gift, what does that mean? If they are divisible, what does that mean?
It means they be accomplished in stages.
They can be accomplished in stages, right? Okay. That is, they cannot be accomplished awesome, right? Okay, we move. So, and you also said that project B and D, project B and D are what? Are what?
Mutually exclusive.
Mutually
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 dependent.
exclusive.
exclusive. So, what does that mean?
They can't be done together. You take one to leave one.
Exclusive.
Acceptance of one will nullify the
We
other.
will
We
automatically
know.
accept the other.
Fantastic. So, can you now see the essence of that? What I've just explained. Oh yeah. Um, all MPV are in what? Gifts. All MPV are in what?
Okay.
Nominal
Present
after
value
tax.
are in nominal after tax terms.
So, what do you mean of nominal class?
Nominal is the real without inflation.
With
Is
inflation,
nominal
sir.
with inflation or without inflation?
With inflation.
With inflation.
Can you see my screen?
No, sir, I can't see the screen.
Yes.
Yes, sure.
No, we can't see your screen.
Okay, so let's wait for the network to come back. But while we are waiting for the network, you could remember when we at the start of this topic, investment appraiser itself. So we said to ourselves, we explain inflation, we explain money cash flow, we explain real cash flow, right? Do you still remember? Hello.
Yes, sir, we can hear you.
So you know that nominal is what? Is
Money,
money,
nominal is
Abby.
money cost flow.
With
Money,
inflation.
money cash flow, right? And money cash flow is with inflation, right?
Inflation, yes.
So if you are using money cash flow, which rate are you going to use? Is it real rate or money rate?
Money rates.
Money
Money
rate.
rate. So money rate. So it actually means that you may want to convert. You may want to do some conversion here using this guy. 1 plus what?
1 plus M.
M. 1 plus half times what? 1
1
plus
plus I.
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 Here. So please don't forget this guy. It is very, very key for your conversion. So let's see if we are going to use it or we are not going to use it. I don't know what is wrong with my. Okay, I guess the thing is coming up now. I'm using MTN. I'm using Wi-Fi for my system. Normal MTN data for my phone. One is going through, one is not going through, and they are both MTN.
Such is life.
So I don't know.
Sorry, Abu, please can you at what point do we convert nominal to real? Because nominal is with inflation.
What did you say? It's
Hello, can you
IBK.
hear me?
Is that IBK?
Okay, I said, can you explain at what point do we convert nominal to real?
Okay. Can can someone answer that question? Any volunteer? Allow me. I want you to answer the question. Hello, allow me.
No
I don't know
idea.
what's going on. Allow me. Hmm. Success at what point?
I don't know.
Ha.
I don't really know. But
You
I
don't
just
know, maybe
feel
you can't remember at the moment.
maybe. I don't know, sincerely.
Does that mean
Nominal,
I feel okay?
nominal cost with nominal cost of capital. When
Mm-hmm.
we have a nominal
Cash
cost of
flow.
capital on nominal cash flow,
Cash
that
flow.
means we have a cash flow. We are given a cash flow with inflation elements.
That is inflation.
So if we are calculating net present value, we are going to match likes with likes. That is nominal cost of capital with nominal cash flow. If we are given real cash flow, then we are going to match it with a real cost of capital. So if we are given nominal cash flow and real cost of capital, then we have to do conversion. We have to convert that cost of capital to nominal cost of capital. So we have to apply the
Officials.
inflation element in that cost of capital in order to give us a nominal cost of capital.
So
I don't
sorry to interrupt. Now that we are giving this question, it is not stated. I can't say anything about inflation or not. So how do we know that these figures are in nominal cash flow?
If you did not see inflation, that means the figures are in real cash flow.
Okay.
Yeah. But if it is
But sir, the question here says all net present values are a nominal
that
after
means
tax stamp.
that means
Sorry.
the cost of capital that was given to us is in real cash flow, then we have to convert it to nominal.
Okay.
No,
Thank
Thank you.
they said they are a
you
nominal.
very
So
much,
when
Mr.
they
Ahmad.
this is inflated.
Thank you very much, Mr. Ahmad. So as he has said, sincerely, he has said it all. And I can remember that he was not in class when I was explaining all this, right? I just have to do some, revision. Like he only met the revision, not the proper class, and yet he was able to stay all these things. So thank you very much, Mr. Ahmad. So once again, question like normal question. I'm not talking about this one because we are yet to dissect this question, right? And the questionnaire does not did not ask me about this question. She only asked a general question that at what point, when are we going to convert? So the essence of our conversion is that the basic rule is that when you are giving money cash flow, that is cash flow that is embedded with what inflation, the discount factor that you are going to use is what is money cost of capital or nominal cost of capital, right? And if you are giving real cash flow, the appropriate cost of capital, the discount factor to use is what is real cost of capital. So real cash flow should go with real cost of capital. Nominal cash flow should go with what nominal cost of capital. But the twist is always that they will give you money cost of capital and they will now give you real cash flow. So you have to convert that your cost of capital that is nominal to what to real, so that you'll be able to use real cash flow with what real cost of capital. So that is just the essence of our conversion, and that is when you have to use what this guy here. Do you get it, IBK? So thank you very much, Mr. Ahmad, and those that have contributed. Can we move forward now? IBK, do you get the gist?
I'm still not convinced.
Convinced with what? That you have
Can
to
you hear?
put your money.
No, the conversion. Don't worry, I
This is
will I will study it. Let's move on.
okay. Thank you very much. So, gift, I stay there.
Yes,
Gift.
I'm
Okay,
here.
very okay, very good. Okay, gifts. All MPVs are in nominal after tax stamp. Proceed, please.
Project E. This is
Okay,
a
you know that
strategic.
project C, the MPV is yet to be calculated, Abby.
Yes,
Okay, so we want to get information about project E. Thank you. Yeah.
so Project E is a strategically important project
Mm,
which the board of OAP Core have decided
mm,
must be undertaken in order for the company to remain competitive, regardless of its financial acceptability.
mm.
Information relating to the future cash flow of this project. Is it just me or is not complete?
Oh, check the document I commented now.
Okay, sorry.
The one Mama please share is not complete.
It's not complete, sorry.
Mm.
Sorry, I'm not finding. Let me check.
Can you see the one I commented on? And I wrote, this is the question.
Is it the one you wrote? There are three questions here.
Oh,
Okay. All right. Okay. So, to remain competitive regardless of its financial acceptability. Information relating to the future cash flow of this project is as follows.
okay.
We have the
So you now have what?
payroll
You have information as regards. So you have sales volume, you have selling price, you have variable
variable
cost, and you have
cost,
what? Fixed
fixed
cost. So and you were told that this forecast are before taking account of what?
selling
Of selling
price,
price inflation. Inflation of how much?
5%.
5%. 5%. So inflation is 5%. Class. Do you still remember the formula for inflation?
Yes, future value.
Future value equals what?
V.
PV,
P into bracket
okay, 1
plus
plus R is
R
power of N.
raised to power n.
One what? Plus
Plus
R,
R,
right?
Yes,
Raised to power what?
N.
n.
Raised to power n or taken, right? So um so that is this is the formula for what? For inflation. I'm just trying to do a recap as well. So this is the form of recap as regards this. So first, we have 5% inflation now per year. Variable costs, inflation of what? So this inflation is what is for selling price. Abi now give
Yes, sir, yes. It's for selling.
from the question, the 5% is for what? Is for the selling price. So that of variable costs, its inflation rate is what? 6%.
6%.
6%. So if you are not talking, you can you may want to meet your day if you are not talking, please. So and what else? Fixed costs, inflation of what? So what can you say if your
3.5%.
3.5? So if your fixed cost is increasing, so it has changed from fixed cost to what? If it is
Variable cost,
increasing at a fixed
Step
rate.
cost, step cost.
step cost,
Mhm.
step fixed cost.
Sorry, please, I can't see your screen. No.
Are you sure? Let me check it by my phone. My phone is still there now. What happened? Maybe it's your network.
Okay, let me log out and log in back. Okay, I can see it
So
now.
it is going to be variable cost in the what? In the long run. But if it is still in the short run, then it is still going to be fixed cost. So long run, all the costs in long run are what? Are variable costs. No fixed cost in what? In long run. So that is economics, for those that sabi economics. So um what am I saying, sir? Yeah, I don't want to digress too much tonight. So fixed costs are incremental fixed costs, you can see, which are associated with what? Project E. Gifts, can you see that?
Yes, I can.
Okay, so at the end of 4 years, you are reading.
Okay. At the end of 4 years, machinery from the project will be sold for scrap with a value
Hmm.
of 4,000.
So that 400,000, is it an inflow or outflow?
Is an inflow.
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 Inflow. So that means you'll be having 4 years twice, right? You have normal 4 years and you also have 4 years for your scrap value. So it
Yes.
is 400K. We are dissecting the question. So I may not even solve it for you. You just really want to compute your table. So the tax allowable depreciation on initial investment costs. You are reading from there, please.
Yes. Tax allowable depreciation on the initial investment cost of Project E is variable on a 25% reducing balance basis.
Basis,
And
yes.
yes, basis. And OAP company pays corporation tax of 28% per year on,
Hmm.
1 year in arrears.
On what?
1 year in
On
arrears
so 1 year in arrest means what?
is preceding year basis.
PYB.
Preceding year
Fantastic.
basis.
Yeah. So this 25 is what? Reducing balance. So that is our capital allowance is 25%, right? While our corporate tax, like profits tax, is what? Is 28% on PYB. You know that another person might say we want the tax to effect in the same year of what? Of incur, right? So I could remember the last question that we saw, it happened like that. They want us to effect the question as they are what as they're happening. Okay, so a balancing charge of an allowance is available at the end of what? At the end of
At the end of the fourth year of operation.
fourth year, right?
Yeah.
So that is of your allowance is very. You can either have balancing charge or what? Balancing allowance.
Um,
I, it seems I've informed you about the difference between the two. Have I? So if no, let me explain to. Should I re-explain it?
Yes, you can.
Hello?
Yes, sir, you can
Okay.
re-explain it.
Should we move forward
I
or I
say you
should
can
explain the
Please
capital
re-explain
re-explain,
it.
and
sir.
allowance? Okay.
Explain, sir, please.
Explain.
Explain, sir.
Um,
Re-explain.
You can explain, sir.
I think you cannot hear me in real time. Is that the problem? Does
Yeah.
that mean that you can't hear me in real time?
No, we can hear you in real time. No, it's just that we have muted our mics.
Okay, okay. So balancing allowance first, BA, right? So it arises when your TVDV, tax written down value, of assets, of KNU, of assets is greater than what? TVDV, that's now tax written down value. So if the tax written down value is greater than the what? Than the disposable, the scrap, like the residual, like disposal
No, but
value. So
or book
that is
value.
when that is when you are going to have what? Balancing allowance. Are you getting it? So if the TVDV, like tax written down value, is greater or higher than the amount that you are to sell it at the end of the day or scrap it, so that means you are having balancing allowance, right? It means you have not yet fully claimed capital allowance on that asset. Hmm? So tax law allows you to claim the remaining amount as what? Balancing allowance. So in this case now, it means you are yet to claim your capital allowance fully on that asset. Since the TWDV, I like saying TWDV, tax sitting down value is what? Is still greater than your what? Disposable value. For example, your assets costs 500k. This is taxation, normal. So 500k. Are you getting it? So, and your capital allowance, CA, capital allowance that you've already claim, is cost to what? I hope you can see what I'm writing. Already claim is what? Is 350. Is 350k. Are you getting it? So definitely your TWDV will be what? Will remain what? 150. I've been now. I know class.
Yes, sir.
Your TVD
Yes,
Yes.
is
sir.
going
Yes.
to
I hear you.
be ahead. So it's going to be 1.5. And if disposal value is now, if your disposal value is now 100k, right? Then you say that this is what? Balancing allowance.
Allowance.
Balancing allowance. But if your disposal is 200, nko,
Balancing charge.
Balancing charge.
so in this case, you will now say that it is safe to say that balancing charge arises when the disposal value of an asset is greater than the TWDV, tax written down value. So it means that you've effectively claimed too much capital allowance. The excess of what you've claimed will now be what brought back to tax as what balancing charge, which is now going to be added to your what taxable profit. Does
Taxable
that make
profit.
sense, class?
Yes, sir.
Yes,
It
sir.
does, right? It does, right? So this is balancing charge. Thank God I've explained this one. Okay, so let me put it to you on your group in case you not so that you not disturb me later. So TWD view, remember, versus disposal, right? So I'm writing. So if your TWDV is more than your disposal, is what balancing allowance. But
Balancing allowance.
if the allowance is more than your TWDV, then it is what balancing charge.
Balancing
That means
charge.
we are going to what add back to what to that tax. Hmm? So I'm writing. So please TWDV notes that notes. Okay. So that's it. That's it. So these are things that you should know, normal. Whether you are writing tax or you are not writing tax, whether you are writing FR, you are not. These are things that you should just know. I just want to dwell on some things that, okay, this is your disposable value. How do you get it? How do you value it? So in that case, we'll just be talking about fair value of a thing, right? And we'll be dwelling into what is fair value. Which standard talks about fair value? Hello?
Sir?
Don't worry. I don't want to dwell on
I
any
can.
IS.
Okay.
Okay, so we move. Um, Only Papa name will family. So gifts you are reading. Please continue reading. Gifts, please continue reading. Hello, is she not there? Gifts, please continue reading.
All right, sir. Um, so OAPO, OAPO,
OAP, OAP.
all right. OAPCO has a nominal after-tax cost of capital of 13% per year.
So money cost of capital. That is what we have, right?
Yes.
Of what? 13%. So what does the rule says, class? Someone should remind me of the rule again.
Discount money. Discount Abby. Use
If you have
money.
money cash flow,
Use
we should use
money
what?
cost of
You should use
capital.
money
Money
cash
cost of capital.
cost of capital.
And if you have real cash flow,
You use
You use real
real cost
cost
of
of
capital.
capital.
cost of capital. We are getting somewhere. Okay, class. This question is loaded. Gifts, you are required, not me. Continue.
All right. I am required. A. Calculate the nominal after-tax net present value of project E. and comment on the financial acceptability of the project. B. Should I proceed?
No. Let's deal with A first, too. Right? So, solution. You can see that, from the very first part of the question, the NPV of E is what is to be calculated. So that is why you have to what? Solve for what? Solve for this. So how do you start? So you start by what? By computing your table. You could remember that long table that we used to have. I don't think I can actually have the energy to compute that table tonight. I don't know. But let's see. May God help us. Normally, by now, you also have been able to compute this table by yourself. So, what is the life of the project? How
4
many
years.
years?
4
4
years.
years. Okay. So this is year 0. Mm. Year 0, year 1, so year 2, year 3. Is it going to contain it? Yes. Year 4. Are we going to have year 5 or not? Class, are we
We are
having
going to
year
have
5?
our
We are
tax
going to
because of
have year
tax.
We're
5
going
because
to
of
have
the
your
Of
that's
the
because of the
because of the
of
PY
ideas.
date. That's
tax.
really
Why?
Fantastic. Do you have working capital in this question?
No,
No.
no working
Right
capital.
now, I don't miss working capital. If you help me see working capital, help me get more. So, tell us what it was.
Ide mama tea house.
I'm at sea. We are not giving us working capital. Okay, so let's take it one by one. You and I know that the very first thing that is going to be here is our revenue, right? Am I still adding anybody? I want to have a full screen. So we are not adding anybody. Let me just maximize it. So we'll be using this side to solve working 1. So if anybody is in the lobby, let me know so that I can add the person. So working notes. Working notes number 1. Oh, Omoba. So working notes number 1, right? How do we start? So we're told that our selling price is going to be inflated by what?
5%.
5%.
5%.
5%.
5%. So, and it has 4 years, normal B. Year 1, year 2, year 3. 1, 2, 3, 4. So our current value for selling price is what?
Sorry, sir.
450.
Which part question is this?
First question, okay. Please, someone should be share that 5-page document that I sent to the group now.
Thank you, sir.
Someone should be share, just forward it back. I'm waiting, please. Are you there? Show me Wale. Check your tower. Hello, what did you say? Hello.
Yes, we are
You
with
guys
it.
should answer. Should I
Yeah, we are
continue?
with it. Yes,
Someone
please.
should forward the document now.
Someone has forwarded the documents. Nana
Okay.
Aisha has forwarded the documents. Yes.
Aisha, thank you. Now, so our selling price is 450 bar
Yes, for year one.
Yes.
Yes,
for
sir.
year one. So if you inflate it, if you add inflation to it, we have what?
We have 472.5.
472.5, yes.
It's going to be 472.5. I hope you know how we are getting it, please. No, please. Not
No, sir.
really. Okay. Okay. I cannot use. I don't want to use keyboard. Okay. Omoba. Okay. I said that inflation. The formula for inflation is this: PV 1 plus R raised to power chicken or raised to power cock n raised to power n, right? Are you getting it?
Yes,
Hello.
sir. Yes, sir.
uh
Yes, sir.
So our PV is 450 year for year one. 1 plus R. What is our R class for selling price? Inflation for selling price is what?
5%. 5%.
5%. Success, are you getting it?
Yes, sir.
Fantastic. So what is our N? Our N is 1 for year one. Are you getting it? So, okay, let me just do this. Let me do this. 1 plus 5% to make it easy. Year one raised to power 1. So 1 plus 5% raised to power 2 for year 2. 1 plus 5% raised to power 3. 1 plus 5%. This is another method. Then raised to power 4. So yeah, supply me all this figure. 450, 475, right? 500, what? 570. Guys, don't sleep. Oh. Me, I'm feeling sleepy at the moment, but I'm not sleeping. Right? Just endure. Endure. So what did you say this one is? If you multiply this with this, what will you have?
472.
472.5.
472.5 or 473.
I hope you're on the same page now, class.
Yes, sir.
Yes, sir.
Fantastic. Fantastic. Please don't sleep. If you don't understand anything, just let me know. If it is 3 a.m. that we finish, it's fine. So
Okay.
next one is what?
Are
Five
we
two
talking
I
five.
about
know
Five two
me, I
four.
never more time
Five
around here.
two
You
four.
anyway. 5 2 what?
24.
2 4. Next one is what?
579.
Auditor confirm. 579. Auditor, yeah.
693.
Accountant figure me.
Yes, sir. Yes, sir. I'm
693.
fine.
6 what?
693. 93.
693. Maybe you should just make this one 473 and cancel it. So we succeeded in getting our what? In our selling price,
Okay.
right?
Thank you, sir.
Yes, sir.
Okay. So you know that this is selling price. This is per unit, right? We don't know what the unit is. We have to get our total selling price or our sales volume. We are yet to know. But let's continue to flex other ones. We have variable. So variable is what? What percentage is our variable? Percentage of
6%.
inflation.
6%.
variable is 6%?
6%. So yeah, give me the figure for variable first. Two what?
260.
260.
280.
280.
295.
Oh no, no. 295.
Yes, sir.
Where is my cursor?
320.
My cursor is that 295, 320.
320.
Yeah, let's include the inflation.
1 plus 0.06.
We should do it as this one, Abby. 1 plus.
So I'm not seeing your screen. Oh,
I wanted to say the same thing.
Eh, please confirm.
I can see your screen. I guess it's your network. I can
If
see
your
your screen,
network
sir.
is not, if your network is not strong, you know, see my screen. From my phone, I can't see my screen as well. My
Uh-huh.
network is not strong. So, but it is because
Okay,
it's
come
not
out
strong.
and join
It's
again.
MTN. You know, I'm teaching with two devices, my laptop and my phone. So I connected my phone differently so that if I meet you
So
on
we
laptop,
should join again, Abby.
no, me, I don't know what you're supposed to do. My God, it has come
And
back.
it has come back.
Yeah, figure me.
Yeah, 1.
Abuchiama's network is influencing people's network.
276.
What did you say,
And
success?
Maxi, are you still seeing the
Yeah, 1.
screen?
Yeah, I'm solving it. I'm not seeing it, but I'm seeing the screen now.
Year one is 275.6.
276.
Two
That's
seven what?
276. 276.
Two seven.
276.
276.
Okay.
Yeah, 2315.
Yeah, 2 is 315.
315.
Don't sleep,
I'm not
please.
sleep.
Uh, yeah.
Yeah, 3.
Mm-hmm.
Okay, I think
351.
yeah, 3 is 351.
351.
Yeah, 404.
104.
404.
Okay.
404.
404.
4.
104.
404. That's a brand
Good job.
of something ahead of a car ahead. 404.
Is it?
404.
It's 504 now.
To 404 is dog meat too.
It's 504.
404 is also dog meat.
Ah,
Onijekuje with palm wine.
one. I feel so. I can go and sleep.
404. It's true. 404 is ready. Abajo. It means dog meat. Hmm.
Mm.
404 is ready. Okay. It's fine. Now let's see the job with that. Success. Okay, so we are done with VC, Vice Chancellor, right? So it remains step cost, fees cost. We never solve anything. No. This one I play. I'm sure it will not attract any mark. She, you not get. I hope you know. All this one will not attract mark. They
Why?
are just
Eh,
time waster.
I can't see your screen, sir.
Yes, it has even gone pata like this. So we have
No.
to like I'm off. He's
Okay.
back. We are back. Every share I screw back. Oh, something went wrong when screen sharing. Welcome. You lost your network connection. Is it possible to share data? I cannot do it. I cannot do it on network. It will not even make sense. I would have loved that we have a seamless this thing. It's back. We have to continue like this. And I'm using glasses. My eyes are aching.
Or can we
Sorry, sir.
play tomorrow?
If I want run away, you want sleep.
Fact.
We,
Even
we
him
just have
too,
to.
his eyes.
We have to. Let's try to. How do I say it? Let's try to do something out of this thing because all these ones are just preambles. We are yet to solve the question. The question we want to solve is capital rationing. This one is MPV. So we are yet to get to capital rationing. Probably we just solve this part, then we take the MPV part, the capital rationing part tomorrow. So let's see what's and I want to reach Yaba Tech tomorrow. I don't think I'll be available tomorrow. Okay, so it's back fully. I hope you can see my screen.
Sorry, sir. Can I ask a question?
Not yet, sir.
Okay, please.
Please, I don't know. I just want to ask the pilot question that FM that was in the shared for FM. The
Mm.
first question there is it um based on this topic?
No,
I don't know if
it's
you have seen it.
investment appraiser. It's investment appraiser, like the first one we saw. It only
Yeah.
has inflation and taxation.
Yes. Okay.
Yeah.
If it is that one, then it is like this one too.
Exactly. Because I know I've gone through it and I was trying like I'm seeing something similar to this. That's why I
It
asked.
does not have capital rationing. It,
This one will not be more loaded than that one. Is that it?
Yeah,
Yeah. Thank
just
you, sir.
This one is going to be more loaded because this one is You know that all these things that we are still doing is still under investment appraisal. I told you
Yes,
after
yes.
replacements, this one that we are doing, CR, capital ration and risk and uncertainty that we'll be doing tomorrow, Sunday, they are still part of investment appraisal. So most likely, let me just tell you this one. I may not want to leave this class like that. So maybe I'll just be teaching you on Tuesdays only. Then I'll cancel my weekend classes with you. So I will not.
That would be most welcomed.
So I will just continue my class with you.
Success.
Okay, so face costs, right? How many percent inflation?
3.5.
3.5%.
3.5.
3.5%. 3.5%. Because it is going to be too much on Mama Z. So the Nov is going to be having a lot to be dealing with like that. But if we can share it, it's going to make sense. I think we have covered like 3 aspects of this topic. It seems we've covered 3 or 4 aspects.
Is she the one coming to take FM?
Most likely. Because the other guy
Ah,
is not feeling fine. So, and I don't want to choke Zain up like that. I'll still be taking you like Tuesdays, but Saturday and Sunday, that one don't go. Okay, so this one will now be 1 plus 3.5%. Me, I cannot be writing anything again. Oh yeah, figure me everything. Just figure me.
776.
7 7K.
Yes, 776 for year one.
Wow, that's too high. Auditor confirm.
Year two, 083.
803.
That
803.
that is Olaumi's voice. Two Abi.
Year
Three.
three, 832. Year
803.
803. Okay.
832.
832.
8 what?
832. 32.
832.
Okay.
861.
801. 861.
861. So I think we are done with this part now. Reflects all our, what's it called? So do we have the units? Is there any unit so that we can complete our
Yes.
revenue? What's the unit, please?
12,000 for year one.
12,000 for your one.
Year two,
Every
13,000.
everything, Abi?
Yes.
What?
No, it's
No, no, no.
different too.
'That
12,000 for
For
right.
Year
year
one, 30,000 for year two.
This one is going to be too rough. Let's put it here. This one has just preamble, no mark.
Hmm.
So total selling price. Total selling price. TSP. So what is our unit?
12,000 for year one.
12,000 for year one. And next,
13,000 for
13,000.
year
mm-hmm.
10,000 for year three.
10,000 for year three.
and then
Mm-hmm.
for year 4.
What did you say is for year four?
10. 10,000.
10,000.
10,000 for both year three and year four.
Yes.
Yes,
Okay. So what's going to be our total selling price?
five
Total.
six 5,676,000.
Five.
This is SP times what? Units. Abina.
Yes, 930.
Hmm. Success. Are you getting it at all?
Yes, with you.
Hmm. Sleeping down the argue like that. Sleep down the argue, are we? Oh yeah, please. What did you say total selling price is?
5,676,000.
5,676,000.
Yeah, let's shorten our answer now, beg.
Oh yeah, five
5,676.
six seven six.
Say it again.
5,
Five six
6,
seven
7,
six.
6.
5, 6,
One,
7, 6 million.
three,
Less
6, 9. 6812.
6812.
2, 8,
Six eight
812.
two. Mm-hmm.
five
5
seven
five
nine zero
790.
six
5,
nine three zero
7, 9, 0. Mm-hmm.
six nine
6,
three
6930.
zero.
3, 0. Omoba. Yeah.
Three
Variable.
three
Calm
three
down. I
three
beg.
one
Yeah,
two.
wait now.
Sorry.
Our activity, right? Not
Hmm?
channel television, right? So VT times unit. Am I right?
Yeah.
Yeah.
3312 for year one.
Yeah, two call.
4095.
4095.
I'll call you. Let me take water. Hello, you can do it too.
My battery.
Mhm. Very. Oh yeah, class. So what happened to our TV?
33. Okay, which one is okay, variable cost, abi? Total variable cost.
3312.
Three
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 one three
one two
thousand
for
three
year
one.
one two.
Okay, maybe so.
Okay.
year
4095.
two 4095.
Oh god.
Sorry.
They don't swallow us soon.
4095.
Yes, 3510 for year
Okay,
two.
I'm not writing anything. Oh yeah, say it again.
From year one,
I'm
three
trying
three
to check
one
the
two.
question again, right? So
Okay.
from the table given, we were given sales volume per unit. So that
Mm.
one is our unit, have you?
Yes,
So
sir.
we are giving selling price per unit. And you're also giving variable costs in units. What about our fixed cost? Is that in unit already?
Yes.
So it has been
It's not a
flexed
unit,
on.
it's cost.
It's in thousands though. It's fixed cost.
Ah,
So we don't need to
It's in
flex that
total.
one, right? It's in total
Yes,
already.
sir.
Okay, yeah, CVC, channel television. What did you say this one is?
Three
hello, sir.
three one two.
I'm with you. Someone is saying something.
Yes, I wanted to say, can we just say the selling price per unit less the total very cost to get our profit? Then we now multiply. Can we also do that? Or we have to?
I, I'm not sure if you are going to arrive at the same thing. But you may try it. If you arrive at the same thing, it's fine.
Okay.
Mm. Oh yeah, figure me.
3312
331,
four
Abby.
zero nine 1212
Okay.
4095 three
Nine
five one zero
3510
510 4040.
4040.
Yes, sir.
Is it in jacket or in open?
In jacket.
In jacket.
This one is 776.
So what about TFC? So it has been
Yeah,
given
one.
already.
Yes.
So 776
776
eight
803
803
03 832
in jacket or in open?
in jacket 861.
In jacket.
Sorry, your figures are wrong. Like for total variable cost.
Which one?
Yes,
Mm.
so
So
Yeah,
please correct yourself. I cannot cancel anything.
yeah. Somebody else gave the same figure now.
So if you take
it's
away
correct.
selling price from your costs, what are you going to get?
Mm,
PBT,
PBT.
Correct.
CBTK, PBT, abi?
PBT.
Ah,
Minus
oh yeah, figure me.
332 minus 776. 1588 for year
One,
one.
1588. 15. Abi, what is
1582.
it? 1582.
1914.
Yeah, I'm not even checking time right now. 15.
88.
Five will fair call.
5 to please write to 3 5 10.
1588. Abi.
Yes, sir. 1488. 1448.
PBT 15. Ah, wàhálà dé. Ọlọ́run má jẹ́ àrí wàhálà. Five is not writing. I don't know. 1588. Maybe it's on
88.
that side. Oh yeah, Kini next.
1914.
You are doing your talking. 1914.
18.
1914.
14. Yeah, 1914.
What happened in this year? Who knows?
1448.
1914. 1914.
Mm,
Any government
yes.
student in 1914. What happened in 1914?
Amalgamation.
What did you
Eh?
say?
Amalgamation
Amal-
by Ilofedu South
Amalgamation. Northern Protectorate and Southern
Northern
Protectorate and
Protectorate.
Lagos Colony. Shebi?
Yes, sir.
Then
Yes.
Mm.
we have it in history.
It's plenty, it's plenty, it's plenty. By who?
So then,
Lord Lugard.
Ilofedu
Abi?
Lugard. Yeah.
Lord Lugard.
that's it.
Who was his wife, say? Flora Shaw.
Flora Shaw.
Mm.
Chine,
Oh,
Lenny Mat.
oh yeah, now this one, year from
2029.
2029, we are yet
20.
to be there.
Eh?
See, any figure you give me is
I'm there
correct.
already.
I'm not counting anything.
It's correct. It's correct. Auditor.
Mm. Oh yeah, let's compute this. PBT for the first time. We want to start from PBT. Yeah.
Okay, 2020.
Oh oh, yeah, if you got me again. Yeah, one PBT. Oh yeah, oh.
One five
Yeah, I don't
eight
want to be scrolling up and down. Oh.
one five eight eight.
1588. Yeah, I've got 1588. Carry the Lenny Mat now.
1588. 1914.
Mm,
14,
1448.
1448, Abby.
48.
Yes.
Yes, and
We are
Twenty
yet
twenty
2029.
to be
nine.
there. 2029.
I'm there. Oh.
Are you in 2029 already? They play.
Yes, sir.
Oh yeah, after we are going to have our tax, Abby. To have part PAT, am I right? What's
Yes,
our
sir.
tax rate? Gift, what's our tax rate? Success. Gift
Our
and
tax
success.
rate is 28%.
28%. Okay, fantastic. Success, do you agree with gift?
Please,
Success.
please.
Okay.
Oh, shit.
Imanko is not on this group. It's not on this call. I don't know why. You
Your
guys will
screen
not
has
talk.
come up. Marco just left now.
The
That's
guy don't sleep. So
that.
you guys will not talk. You will not be allowing all these ones to be saying that now only girls that they teach. For house, they only complain, say now only girls that they teach.
I
She
do
not
now.
just. Because we are the sort of life. We are the sort of life.
Oh yeah, 28% on this one is
Excuse
what?
me, sir.
Or 1588.
43,624.
43
44.
what?
44.
624.
Say it one by one. Just say it. 43 what?
624.
43624. That is 4 digits now.
That's
I have
four four four
440,
445.
445.
It's 445 now.
445, sir.
Uh,
She's done this.
445.
Okay, it's preceding year basis.
In Yaket, have you?
Mm,
Okay. I'm with you. Do you know that we are supposed to put things in year 2, not year 1? Because of what?
yes, PYB.
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 Mhm.
536 for year 3.
536.
Year 3.
Sir,
536.
your screen is not showing. No.
You're not showing yet. Oh God.
Maybe you already know the answer. Continue now.
405.
So I don't know. I don't know.
405.
What is
405.
that? What is the tax percent? Is it 28?
Yes,
Yes,
ma.
28. That's the corporate tax. Did you say 405?
For year 4, it will be 405.
Don't worry, the screen will come up now.
536. Mama,
It will not come up now.
Sorry, sir.
Hmm?
Hello, sir.
I'm with you.
Please, the one of year one. When are we going to record it?
It's going to be skipped to year 2. So year 1 tax is going to be recorded in year 2. Year 2 tax is going to be recorded in year 3. Year 3 tax is going to be recorded in year 4. Year 4 is going to be recorded in year 5. Why? PYB basis. So it
Okay,
occurs in year
yes, sir.
1, but it's going to take effect in year 2.
All right, thank you, sir.
Awesome. Awesome. You are welcome. I said awesome. Yeah. So yeah, year 5. Oh. I don't know why this pen is not coming up.
568.
No.
So yeah, power parts, PAT, profit after tax.
1680.
Dash. This is 1588. Can you see my screen now?
1469. No.
No, sir.
But you can okay. Stop sharing. Okay.
Take that.
This recording, so you may not even enjoy it. So that's one.
Sir,
Yeah, I'm listening.
sir, before we start the question, you said there
Mm.
was no cost of capital.
There is what?
Cost of capital, or we are not using it yet.
Yes, we are not using it yet. You know the rule now. So
Okay, we are not using it yet, have you?
yeah, until we get to PV. So if the cost of capital given is not nominal, if the cost of capital given is real, that means we are going to convert it to nominal. But if it is nominal cost
Okay,
of capital we are given, we don't need to convert again. You know that we flexed it with inflation, so that become nominal cash flow like that. Do you get?
Network today too bad. Too bad.
Your network, Abi, yes, is everywhere. This one on my Wi-Fi is bad, seriously bad. Abi, let me try this one on my system. You just suck everything.
Maybe it's the weather. Maybe it's the weather. That's why. That is one of the main reasons. And also, it's everywhere.
Thank you. Okay, I think we are back. We will not leave here till daybreak. Till we hear Allah Akbar, Allahu Akbar. We now stop. We are back.
So we're not yet back.
We are back. We are back. But I say we are back. Trust me. Are we back now? I hope you can
No,
see me. Yeah. You can see
Not
my
No,
yet.
not
screen
yet.
now.
So
oh,
Any
With that one. Won't sleep. Serena.
Serena Williams. Guys, this one no gree show. 10 is happening. Show my screen anyway. Now your screen. God. Yeah, let's continue, Jerry. I hope you can see it now. We are live. We are on the same page now. We are part for year 2.
part for
Part for
year 2, 1469, 1469.
1469. Napoleon Bonaparte conquered nation. He was thrown out of the window. Yeah, 3.
912, year 3, 912,
9,
12,
1, 2. Ah,
year
Good
4.
evening. Sorry for late message. To give the iron bender their balance. I don't know if you are aware. I'm not aware. Coming. Good evening. I'm not aware. Let's pay him on Monday. Can he wait till Monday? Ṣé mo gba account number máa yí lọ́dọ̀? Let's do it till Monday. I dey pay for it. Yeah, PAT. What about your 4? I'm sorry, guys.
1624.
1624.
24.
Oh,
Then year
that's
five
normal.
568.
Year 5 is what?
Five
Allow
six
me.
eight in bracket.
Sir,
You have a
year one.
question. Mm,
Yes, observation. Sorry, our PBT. Am I
mm.
the one that is doing a wrong calculation or not? Or is you are the one that writes the wrong thing? 1582, that is the answer I got here.
See, anything where you get is correct. I cannot clean anything. So someone should just confirm. It is what you are actually getting from me. That is what I'm writing. So if you take away
1582.
this from this, it should be 88
Five
now.
I got
Abi?
2, but I just keep
It's
quiet. So
15.
one five.
it's
Mm,
1588.
I got 1588. It is 1588.
It's
1588.
1588.
okay, that continue. Anything you feel like is the answer, write it there. So you shall know the step. Since you know the step, it's fine actually. So that is what we want to. So let's quickly do the tax saving or initial
Yeah,
tax
tax
saving,
saving.
Abi. Capital
Yes,
allowance.
sir.
Gives, are you there?
Mm.
Success, are you there? Allow me, are you there?
Yeah.
I'm here.
Clarence.
Yes, I'm here.
Okay. Clara, Mara, Clara. Uh, okay, so tax take.
Mr. Ahmed, are you
Uh,
there?
what did you, what did you say?
Mr. Ahmed,
I mean,
Yeah, I know so Mr. Ahmed do. Yeah, if you like Mr. Ahmed, they there. If you like me, they there. So capital allowance.
Second say na man, Abi.
Yes. Wetin man do man. So yeah, we can move. So what information do we have as regards capital allowance class? Gift. What's the information? Our reader talk.
Capital allowance.
Can
25%.
you 25% on what? Straight line based or reducing balance?
$15.
Reducing
Reducing balance.
balance.
Reducing balance.
Reducing balance. Okay. You can still see my screen. Reducing balance. Reducing balance. Yes. So if it is reducing balance, we can do this. How many years class? 3 years or 4 years?
4.
See, don't let us forget our escrow value, please. It's very important.
At the end of it's choice.
You got a lot of thinking again. Hello.
Hi, so hello, are you talking? Are you saying anything? We can't hear you. I don't know if others can hear you. Please, can you hear me? I think he has muted. Okay.
I think he has left to the other line.
We can't hear
Okay.
him.
Thank you. Yeah, fine. Yeah, it's fine.
Where did we go to again? No, no, the class is taking so long.
can you hear me? Hello, please talk if you can hear me.
I can't hear you clearly. No, sir.
Clarence, I guess you are talking, but I can't hear you.
I can hear you, sir.
Your voice is fainting.
Okay, okay. So
Okay, yes, it's fades.
since we are going to the route of reducing balance,
Oh, don't come out.
this is the best formula to
Maybe we
use.
should just continue
This is
tomorrow.
the best method to use.
The last time.
So, so what is our year one cost for the assets?
25.
5. Allow me. So this is our initial outlay as well, right? So
Yes.
the depreciation is 25%, right? Hello, am I right?
Yes, sir.
Yes, sir.
Okay. So 25% of 25 is what?
625.
625, are we?
Yes, sir.
Six
1875.
two five. So what's our MBV?
1875.
1,000.
Ah, 1,000. Okay.
Not 200 now.
1875.
Say it again. MBV is what?
One MPV
1875.
1875.
1875. So year two value will be what?
1875.
Then it is reducing balance. So 25% of
69.
1875 is what?
469.
469. MBV will be what?
1406.
1406.
1406. Success.
352.
Year three value will be what?
352.
Success.
1054.
1054. Mm-hmm.
264.
Sorry, 358 too. 352. Mm.
Yes, I said 352.
Mm-hmm. Yeah, next.
1054. Then 264.
55.
Oh my God. Why they attack us
allow
like
me. Allow me. What happened now?
790. Why is it 55? Okay, very simple.
Is
It's
it 55?
264.
264?
264.
10. Yeah,
264.
1054. 1264. Then
Then
790.
790.
Oh, wow.
You know what? Allow me. 55. Wow.
Yeah.
I approximated. I use the dot straight away. That's why I get 55.
Ah.
Okay.
I didn't remove the dot after the 25%. I didn't approximate. I didn't do anything. I just do
Okay.
it like that. That's how I get my 0.55. That's why I say 5.5. I didn't remove the
Okay.
dots. I didn't. I just do straight.
Okay. That is offer straight. You know that. Oh, yeah. What's our MBV here? Always remove what is supposed to be.
790.
790.
79 what?
Zero.
0.
Okay. So our tax savings, our tax savings is going to be on
The depreciation.
again. Tax savings is going to be on our depreciation value. I've been now.
Depreciation. Yes, sir.
So what's going to happen? So tax savings, yes. Wow. I'm coming now.
I wanted to choose. You said
My legs are itching. Okay, so 625. What's our tax saving percentage? 28, Abby.
Yes, 28.
Tax
yes.
saving is what at 28. At
Sir?
28.
Okay, 28.
So yeah, this is how it is. Yeah, 625 or 28% is what?
175.
175.
Yes,
Mm.
sir.
I'm coming.
131.
175.
Yes. Next one, 131.
175.
99.
Mm.
Yeah.
Mama, calm down.
Uh,
131.
131. Okay.
986.
986.
It's 99
98.6.
or it's 99.
It's
That is
99.
96.
99. That's 98.6.
Hey, sorry.
74.
74.
Yes.
Okay, 79.
99. Yeah. Okay. So these are tax savings, right?
Yes.
Yes, sir.
Okay. So what about our scrap value? You know that our NBV is sitting at our uh, tax saving value. You know, Chebi.
So I didn't
Your
get
voice
it.
was
The line
fine.
was breaking.
So in this case, our tax return value uh, is the same thing as what? As our NBV. If you are using balance, the same thing. So MBV, yeah,
Please, sir, can you
we are
recap what
done.
you just said? You said our tax savings is what?
No, I said our tax return down value. Same thing as our what, MBV. And the last MBV that we have is what? Is 790, right?
Yes, sir.
Am I right? So, but we were told that scrap value is what? Disposal. Disposal is what? From the question, what is disposal?
400.
Eh?
400.
400.
400.
400.
So between tax return down value and disposal, yeah. Which one is higher now?
Tax
Tax
written down value.
return.
Tax return down value. So is it balancing charge or balancing allowance?
Allowance.
Balancing charge.
Balancing
Balancing
allowance.
Allah.
Charge.
Charge.
It's allowance.
Allowance. It's
It's
allowance.
allowance.
It's allowance. Balancing
Sorry, sorry,
allowance.
sorry.
Balancing allowance, not charge.
Of how much?
Balance
Balancing
allowance.
allowance of how much?
350.
350. 350.
So where did you get the 750?
790 new. Okay.
390.
Yeah. And this value. Yeah, what's our balancing allowance? 390.
350.
90.
Yeah,
390. 390.
Okay, so that's it. So just show balancing allowance. So that is what they require. What is the balancing allowance? Balancing charge or allowance is available at the end of 40 of the operation. So showing it will have to probably attract one half mark. Nothing. We are showing nothing, nada on it. So let's put our tax savings here in Ujere. Please, tax
Hello, sir.
savings. Yes, boss.
Please, where did we get 2005 costs?
In the question, initial outlay.
I understand for you.
Gift, out. Where did you see 25 initial outlay?
It's in the beginning of the question.
Where is it?
Initial investments up. You see,
The company considers
Yes.
5 projects as follows. Project A, Project B, C, D, E.
But initial investment for project E is 5,000 now.
It's 2.5 times 10.
Now you give me 25.
Project A is
I
2.5.
know could there.
Project A is
Which
2,500.
which
Project B
project are
is
we solving for?
Project
I
E
will
is
not
five,
cancel
E.
five,
this one.
5,000 now.
E. E now is 5,000.
Seriously.
E.
Why?
We are calculating for E.
No be you
God.
with
There is
the
only the
Who
is
gave that
E.
figure?
there is God though.
Chicken. Sorry, what do we do?
It's correct.
Oh, no.
Please correct it yourself.
Eh?
Who gave me that figure? Let's rewind.
Okay.
Yeah, let's quickly go back. So just cancel it.
the person will not talk.
It is really that.
You are laughing.
It is really that. Oh my God.
His gifts. Where is gifts?
No, I didn't give him the figure of 2.5.
I think he's allowing you.
I did not.
Hello. I'm here. What's
Make we
happening?
leave. We give. You go.
Who calls 2.5?
Welcome.
Been
You
absent
gave
for
us
some
a
minutes.
wrong.
I went to.
You gave us.
You
Which
gave us
one?
2.5, right?
Oh my.
The cost.
You gave
Yes,
us
I
two
gave
five
2.5.
instead of
I
five
gave
It's
you
thousand.
5,000.
5,000.
Instead of
It's
5,000.
5,000.
Why are we using 5,000?
We are solving for
We
Project
are
E.
solving for project E, not A.
Wow.
Wow.
I'm
Wow.
sorry,
Wonderful.
Fantastic. Fantastic.
I'm so sorry. Seriously.
I'm busy, please.
It
Go
is
and
well.
sleep.
I can't deny it that I didn't say that. I was the one that gave the number out.
Thank
Shall
you.
don't give me
It is well.
poison.
But we didn't even check it.
Le kusa. Inú ẹ̀ lẹ máa gbódò.
Auditors, where are the auditors here? You put in your auditor.
5,000. So this one is at
So We have auditors in the house. It's not check. I
They
don't
did
know
not
what is
audit.
doing.
Okay, thank you, guys. Yeah.
Yeah. So we start all over. We move. Mhm. We move. See you.
Wow.
Mhm. Then family, sir.
Sorry, Ekbeleza.
It's fine. So FBV, TVDV, right? Same thing as MBV. So tax savings. So let's be fast at 28%.
2812. I mean, 5,000.
So year one.
28% of 25.
So year one is 5K.
Yes. Depreciation 1250.
So the revision is 25%.
1250.
1250.
1250. Yes,
Yeah, MBV.
3750.
3750.
Tax savings, let's please.
Okay.
Add income number two.
350.
350. Hope you use 28%.
Yes, I do.
Or if anybody call me back, I will not agree. Yeah, next.
3750. Depreciation 938. 263.
3750K. Ah, it can't be now.
Year two now. Year two
Uh,
cost. Reducing balance.
938.
is it 37 or be 3250?
That'll be 3.
3750. Three seven
Okay. This
fifty
is 7 not 2. Okay.
minus, so depreciation is 938
938.
38.
Mm-hmm.
MBV 2812.
2812. Tax
Tax
savings
savings 263.
263.
So year three now.
Okay. Well,
Depreciation on year three 703.
703.
MBV 2109.
2109.
Tax
Savings.
savings 197.
Mm-hmm. Yeah, 4.
Cost 2109.
2109. Mm-hmm.
527. 527.
Sorry, are you
Mm-hmm.
using 28% for this tax savings?
Yes,
Yes. Yes.
I'm not
yes.
getting the same thing.
Please do it very well. 209 minus 527. 1582. So
Mm-hmm.
527 times 0.28.
Yeah, 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 yeah.
148. 148. Tax savings on year four. MBV in year four 1582.
Okay. T with DV
TV
is what?
210.
1582. Are you?
1582. Sorry. Yes.
Can you dispose our?
Disclosure is 400.
It's correct, it's correct. It's supposed to be on depreciation. I go they do for net book value. Don't mind me.
Thank you,
Yeah, it's still
David, for
balance
taking us back. So it's still
mm,
balancing allowance, have you?
allowance. Yes, 1182. That's our balancing allowance.
Of what? What's that?
1182.
Okay, you don't need to count anything.
Deduction.
Okay.
Excuse me.
Ah, what about our scrap value?
Okay.
Artificially. Okay.
Àti ṣe
Balancing
òun nìyẹn now.
allowance with disposal.
1182.
Let me put it very well. Scrap value. So the proper answer is correct that by. If I don't put me.
Somebody else should, but it's correct. It should correct. It should correct.
It's correct.
But wait to year 4.
Okay.
At what point did they sell the asset?
At the end of year 4.
Hmm?
They didn't say, but at the end of 4 years, no, it's still the national from program to state for staff to value of 100,000. They didn't specify.
At the end of 4 years.
Mama the mama. Allow me for that. So that means if it is sold at the end of 4 years, yes, it means we don't need to depreciate for the 4th year.
The
So it means
depreciation,
it has
yes.
been sold at the end of this year. So this guy now,
So,
this guy will be out.
Yeah.
So our year 4 will be, you know that we already have scrap value.
210.
So 210, no depreciation. 210.
Okay.
So 210 is 28% on it. Get it.
Oh, very nice. That'll be 591.
What did you say?
591.
Is it raining over there?
How many percent, sir?
28%.
591.
Okay. So that means
If you do 28% on that 400 is what? On that disposal is what?
112.
112.
Okay. So 28, I mean 2109 minus 400 is what?
1709.
1709.
1709. So 28% on that 1709 is what?
479.
Okay. So our depreciation, right? So at number 4 years, at year 4. So that means our start taking down value will now be what? Will now be 2109. Am I right? So disposal is this. Balancing allowance will be what?
1709.
1709. Now 1709. Tax savings. Don't forget what I write on that I sent to you. So balancing allowance, is it not going to be charged back or what? What did I write for year 4? What did I send to you on the group now?
Let me check.
Yeah.
Claim the shortfall.
So you claim the shortfall and the balancing allowance is what is the shortfall. It means that you are yet to claim it completely, right?
Yes, sir.
Mm-hmm. So we want to claim our this thing on this. So our tax savings. So what is this going to give us? For what?
479.
479. So 479 is our tax savings for year 4. So that is how you treat your balancing allowance. Thank you.
Thank you, sir.
Thank you, sir.
I made a laugh group now. So if you hear your name, stand up.
Hour 17.
So Eze, are you still there?
Yes, sir.
Oh, Eze. Are we on the same page at all?
Yes, sir.
Yes,
Awesome.
we are.
Fantastic.
Yes.
Fantastic. So Balogun, are you with us?
Yes, I'm with you.
I'm sure that we're on the same page. Musbaudin, how are you? Are you on the same page? Musbau, you may want to unmute yourself and talk. Musbau, she's not with us. Muslim, Musili, yes. Oluwatoyese, Oluwatoyese, it's been a while. Are you with us? She's not with us. Debbie, how are you? Are you with us?
Sir,
Debbie,
3 minutes to good morning.
it does not matter. Debbie, are you with us? No. Success,
We are
how about
taking
you?
attendance.
Yes, I'm taking attendance. Success, success. Akinwumi, how about you? Hello, Akinwumi. Hello, IBK. Gift, are you still there?
I'm
Yeah.
here.
Yeah.
David, okay. Apart from David, what's on this? So let's continue. So let's fill our table. Let's go back to our table. Tax saving for year 1, it will not be given. In year 2, it will not be them since we are dealing with UIB. So let's wait for year 2. So year 2 will be what class?
350.
Say what?
350.
350. Next one.
263.
Yeah, 263. So
350. Next
263.
one.
263, oh, not
Okay.
19.
197.
197.
Next one.
479.
148.
479.
479.
479.
You say 179.
I said
7.
Okay.
479.
So what about initial outlay of project Egypt?
Okay.
Initial outlay for project E is what?
5,000.
5,000.
5,000.
5,000.
Fantastic. Fantastic. See, class. This tax saving will not be in brackets because it's an inflow. But this tax of 28% is going to be in bracket because it is what? It is
Outflow.
outflow. Please note that. Hmm? So,
That your year 4, Abuja.
mm,
Not 97. Sorry, 197.
what happened? So, what's going to be in this year for year last for initial outlay? You know that we recover our scrap value back. So, you are going to put it, which is 400. Do you get?
So, please, what did you write for year 5 for tax credit?
Tax saving is 479, not 497.
Okay, 479. Maybe my fault.
And
My
this
mama
place you are
fault.
putting that PBT, I mean tax of 5681 is 568 though, not 5681. This your tax.
Okay.
Yeah, it's only
Is in
tax.
brackets. Maybe.
Yeah.
Okay, this is bracket.
Mm. Yeah, yeah.
Sorry, please, how did you get the 479?
This is it now.
Balancing our tax savings.
So your
479.
tax savings, balancing allowance
So that is 28% of what? One
of
seven.
your balancing allowance figure.
So Abuja, please can you scroll balancing?
Okay. Okay. Thank you.
You are welcome. You can see I don't put time inside motor for you. Mm, That's
Okay. Where is your steering?
Ẹ fi steering sí sà.
Again,
Ẹ bá
time.
possible ẹ lè bá wa fi AC sínú ẹ̀ á lè cool dáadáa.
let me put
Ìdí
exhaust here.
handle.
Exhaust. Double silencer.
All the pilot question and
Yeah,
ICAN part question help us to
yeah.
pack it inside. Let it drive us
I
to
be say
ICAN
this is
exam hall.
me.
I didn't put door. How many door? Four doors.
4 door ni 4.
Abeg, let's
Two dirty
4 o.
wow.
Ẹ lè lè ṣe ní
let's
limousine tó
proceed.
jẹ́ 16 door.
Let's proceed though.
Abuja, let's proceed. Oh, people want to sleep. Oh, I beg go. Ah,
Limousine sir, not 4 door.
Abuja matter no
Okay.
one sleep tonight.
You don't want to sleep. So I
Yeah,
thought you
very
were feeling
tired.
sleepy.
Once you start working, it's
Okay. So
cool.
next one is net cash flow, Abi.
Yes, sir.
Oh yeah, let's get our net cash flow.
Gifts.
This one is five point
If
five
that bless,
thousand.
oh,
Mm.
She just left.
This one is 6.5.
Oh yeah, figure me.
Yeah, 15, let's see. What's my calculator? 15, yeah.
Ṣé report eléyìí bí mo bá ọ̀bọ yìí ìwọ engineer ilé. Oh yeah, I'm waiting o.
Year one, 15 latest.
15 what? 15,000. What is it?
8, 8. We are bringing the tax down.
1588, 1588,
Yes,
Okay. Yeah, two. Okay.
yes. 6, 9, 12,
1819.
350. Yes.
Eight, nine, 10. Yeah, next.
9, 1,
1175.
1, yes, 260. 1,
Yeah, next.
1, 1,
1821.
yes. 1, 9, 7.
Yeah, next.
311.
5, 6, yes. 479. Yes.
Okay. So DCF,
Mm,
right? At what percent? So remember the rule. Remember the rule. Real cash flow begets real cost
real
of
cost
capital.
of capital.
Money cash flow is what? Money cost of
Money
capital.
cost of
So
capital.
this cash flow that we're having is money cash flow. Do we have money cost of
Yes,
capital?
yes, I
No,
think so.
Which cost of capital are we giving? Is it real or money? Let's check.
It's
money.
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 So
It's
that means they
money.
are the same. We don't need to convert anything. How
Yes.
many percent?
13%.
13.
13.
Yes.
Yes, sir. Yes.
Oh yeah.
This year.
How do you do your
One,
this thing? One what?
1 plus 0.13
One plus zero
power point
point
one three
one three.
three
Mm-hmm.
power 1
This to power
minus 1.
minus n.
1.
Maybe it is one or two. So maybe it is one. You put one. Maybe it is two there. Do you get?
1 is 0.8858.
So yeah, quickly figure it.
0.23.
Your zero will be 1.
Very good.
Yes, yes,
I like
year
that.
1 is 0.885.
885. Mm-hmm. Yeah, next.
0.783.
Yeah, next. Please. Next
0.693.
693. Please.
I'm not seeing your
So that
screen.
as we be professional,
0.
I'll be able to qualify.
0.6.
You too, should start teaching. 0 point what?
We can't see your
613.
screen.
0 point what?
613 for year
Don't beat
4.
me. 613.
Hmm? Mm.
So yeah, next. Yeah, next.
0.543.
Auditor confirm. So this one
Sir?
will not be what? I said auditor should confirm. PV.
Okay. This one is 5,000. So 5.885 multiplied by 1405 for year one. Oh, sorry. Yes, now. So we just add everything together. Yes,
Year one is what?
1405.
Year two.
1425.
Allow me.
One
I
four
used
two
to say.
four. 1424. 814. 11
What are,
116.
my screen has gone. Oh. I did not say anything.
Wow.
We talk.
I didn't know.
I said it. I said we can't see your screen.
So I said it.
I did
I
not
said
hear.
it. Ah.
It might be no. Sure.
Okay.
169.
Year two is what?
2.
1424.
Yes.
Igbo.
Year two,
Year 2,
1424.
1424.
One four. Wait. One
Oh,
four two four.
24.
Oh, one four.
814.
Four.
814.
814.
Everything come for the one. Eight one four. Mm-hmm.
1116. Triple one
1118.
six.
1 1 2. Yeah.
It's six, so 1116.
Oh, take it like that. That. 1 1
Negative and figure
3
762.
7. What do you now have?
169.
I'm not seeing the screen. No.
Negative and figure 762.
Maybe it's your side.
Sorry, you're not writing it in your dictionary. I don't think so. Yes.
Has he gone? He has gone out.
Has
No,
it
I'm
gone?
still here. Oh.
Okay. But you're not writing anything.
Call the figure for me again. Yeah.
13814.
Yeah,
Year
next
4 is
is
1116. 169. The next year. Yes, 116.
6 will be 8.
6.
What is the cost is like this? So you're long.
Emma,
Oh yeah, next one.
169.
162. Oh yeah,
While
what's
a
the
negative
MP?
NPV of 72. 72 negative.
72 minus
Ah,
72.
irú project wo lélẹ̀ ìgbà látàárọ̀ àti a tún máa reject ẹ̀ ni.
NPV equals to 72 negative.
Oh yeah, advice please. Did you say that we should advise?
They should reject it.
And comment on the financial acceptability. Oh yeah,
Yes.
let's comment.
Project
We reject
E.
outrightly.
We reject
We
because
get
the project is not viable.
Project E should be reject.
hey, please take this
Without any
comment seriously.
consideration.
Yeah, no dey there.
Ah, allow me not to. Project E should be reject because
Can you imagine? Upon distress látago mẹ́sàn-án àbọ̀. Imagine. Èèyàn tún máa ń jẹ gbèsè lórí project ẹ̀ wá ní kí n wá gbarú ẹ̀. Who does that?
yeah.
So how do you advise?
The
Management
managers
should
of
reject
OAP company should reject Project A because it yields a negative NPV of 72.
Which means that the project will not be viable.
Viable.
English.
Anything we like speak
No,
and
pay
beg for home.
attention to it. Pay attention to this. It's very key. That is where the large chunk of your marks is going to come in.
Hmm?
Do you get?
Which implies
Sir, let that person borrow us that English again so we can pay attention to it very well.
that the project is not.
Okay, oh yeah, let me write it on this place for you. What is our NPV again, class?
Next 72 in brackets.
72.
Miss Taiwo,
Ma,
you are too posh about it. Gbèsè 72. Stop.
oh
So
my
this is the
goodness.
interpretation. Can you see my screen?
Yes, sir.
Yes, sir.
So NPV no less than 0 means what?
Okay.
Means this is the interpretation, not the decision. No. Means the project. I just want to give you this because you are on this call now. So the project present, right? So this is how you do it. Do it with further value of what of inflow is less than
Higher. Lower.
cost the
Okay.
of what cost of investment. Don't forget what I told you at the beginning. You are not just, in other words, for more, it will reduce shareholders shareholders wealth, shareholders wealth if shaking if accepted. All right. So decision.
Decision.
Yes. Rejects reject the project. Why? Since it does not meet the minimum class. What is the minimum return? Minimum. Is it called like this? One lemon. Minimum return.
Titi, please, can you mute?
What is meaning of minimum return? Minimum return is what? Cost of capital now. You should know now. Don't forget, at the start of this topic, I told you that what you are comparing the return versus what? Versus the cost of funding, right? The return that you are going to get on that investment versus the cost of funding, which is cost of capital. So in fact, it is not all about your NPV. Sometimes your NPV might be positive and still be less than your cost of capital. So in that case, also, you still reject it, right? But examiner might also ask you that at what point can you accept this kind of what projects? So you now say unless the project is what statutory. If the exam
Sir, the blackboard is not the
might ask you
blackboard is not
what are the
showing again.
circumstances that can make you to accept negative. It will come up now. Am I being?
So unless
I'm sorry, it's going to come up. Unless the project is statutory and mandated. So that is when you can actually accept projects with negative NPV or projects that is less than your cost of capital. Don't forget this thing. Be with me here. Be with me. NPV okay, but less than cost of capital. Please don't accept it.
I'm not with you. I didn't get you.
What are you saying? Like,
I said I'm not with you. I didn't get it. You said unless the project is what?
I'm
Unless
coming.
you're bored.
Because I can't
You
see
are
you.
saying it now. You are saying it now. You are saying it now. See, in instances, so since the project does not meet the minimum required, well, I will not say that because it is negative, right? It does not meet the minimum required return, which is what? Which
cost of
the
capital.
cost of capital. So, of the two instances that you cannot actually accept a project is that number one, it's going to be negative. Number two, it's going to be less than the cost of capital. It might be positive, but the positivity is not so high as as the cost of capital. You're actually going to reject it in both cases, right? So then
Yes.
if you now have such projects, what are the instances that you are to accept it? So the very first instance is that when the project is what statutory, are you getting it? For example, government of government regulation,
Oh God.
right?
Yes,
Or what? Environmental compliance. See, like I said, it's not all about your calculation. If you get a calculation right and you don't know these things, you are still know, then actually give you tools in that your calculation and place this on 7 because you are actually advising the management. They don't need your figure, they need your words, your advice. So, of the second instance is that they are qualitative or what strategic factor, not what not captured by MPV, right? So you may assume that okay, there are some factors that are not what captured by MPV, and you may want to, because of those things, you may want to accept it. Probably like you're actually acting on the basis of a CSR, or you want to act as a synergy with other projects, or just because you are entering a new market, that is why you're actually running on a low cost, which is normal. If you are just entering a particular market industry, it is normal for you to lose, right? So you may want to continue. You may want to set that one as a basis for yourself and what, or maybe you are trying to protect the existing operation. So since you are trying to protect the existing operation, you may want to go with your what negative MPV. Are you getting it now?
Yes, sir. Can you recap the second point?
Yeah, let me write it. There, I hope you can see my face now. Qualitative. Can you see my face?
Yes, sir.
Yeah, strategic factor. Mama T, are you still there? Not captured by what? Mama T, it is for
I'm here.
example. Entering. So any spell that I did not get correctly, let me take it like that. Entering what? A new market, right? Protecting existing operations, hmm? Like CSR again or synergy with other projects. So that's it. Third one is that if you want the project to be accepted, so if management still want to go ahead, they should re-examine. This one is another topic entirely. So am I free to continue? Can I continue?
Yes,
Yes,
sir.
sir.
Yes.
Okay. So this one, when you get to the SFM, it will be called adjusted present value, adjusted present value, APV, where you'll be having your case base, blah, 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 not just ordinary MPV again, right? But don't worry, wait till next that you'll be writing strategic financial management. So,
Amen.
um,
Amen. Amen.
alternatively, right? If the management, sorry, Lematoma still wants to what? Go ahead,
She wants to embark on the project.
they should right? They should what? They should do this. One, re-examine. Hmm? One IS came to my mind when I wrote exam now. I guess that is IS 12, IS 12 tax income. Abi, what is that
Income
IS
tax.
12? Income tax. So if you have, it is always deferred tax. So this IS says that you should recalculate it. If you have otherwise, recalculate it again before you accept that figure. Not to be what is to be recalculated. I don't know if you are still doing income tax. So re-examine assumption, cash what? Cash inflow. Please, all this, if you have passed FR, if you have passed everything, see how like that. Please hold all this information. They are very, very key when you get to final because of your case studies. All this information are very, very vital. So it will sharpen your case studies, solution, answers, right? So don't just know them for knowing sake. In fact, it can also help during interview too. If I want to interview anyone that is an ICAN student, not a chartered accountant, too, these are things that I'm still going to ask him or ask, right? Anyway, I'll just be killing the person with standards. Yeah. So if you know it, fine. If you don't know it, restructuring, cost reduction.
Your board have gone. No, I not see your board.
I can cover both. So re-examine assumptions like the following as your cash inflow, cost estimate, discount rate, re-examine it. Consider restructuring. Maybe you should try to seek for extra revenue like that, right? You cut off costs. So third one is, I think we are good. Let me just stop here.
So consider restructuring brackets, cost reduction and what?
Cost reduction, right? Reduce your cost, then extra revenue streams. Seek for extra revenue. So you may also look for finance financing option, or tax incentives. Probably if you are dealing with tax pioneer, tax pioneer now. Oh, you do it in advanced tax pioneer legislation. Return. See, tax pioneer is very sweet and cheap. Like very very cheap. It's very cheap. Just go and chop and clean out with final. What can
Tax
actually
for
give you a
everything.
big that audit is very stupid. But you should know your way. No panic. Just let it dey go. You may not understand what you are doing at first, that tax, that audit, but shall continue reading it. If you get to a point, you feel like, oh, more, am I going to write this audit? Audit is very stupid. I have a guy like that. He has been writing audit and CR for 3 diets now. Like he sabi everything, but there's still a shenka. I don't know. But if you can go to right path, like there's this lecturer, Ilabe. His name is Ilabe. When you get to final, just go to right path and go and attend his what's it called? Say the short class, like the makeup class. You collect 5,000 naira from you, give you plenty questions, you solve. Then with that one, you should be able to pass the exam. It is not that those questions will come out, too, but those questions will just do something like for you that it will boost your morale, it will boost your confidence, and eventually, you should be able to pass with it. So that's it. So we've answered what's the code? Mm, okay, so let's conclude. Conclusion. Conclusion.
Please, your screen is not showing anything.
After this, okay. Maybe we should let me allow this Wi-Fi to charge for a while. Maybe 3 minutes. So conclude all these ones that I'm saying now, they are very, very key, right? So I'm not saying that you should attend physical class, but there are some things that you will have to do for yourself. So like when it comes to case study now, you have a lot of guys there that are very, very good in tackling case studies. But case studies, believe me, it is what you know now that will still help you in that case study. So just calm down, read those cases, and answer it. And don't just say that the sales increased by 30%, then we have to reject. No, we've seen that the sales has increased by 30%. So you tell us that, you now tell us why did that happen? Why? Then you now advise. So that is how you get your market case study. Don't just say that it increased by 10%. We know that it has increased by why? The reason might not be stated, right? But just try to come up with some reasons that are reasonable too. Then you now advise. So if you are for your level now, if you are doing FR and you want to they give you ratio analysis in your FR, right? These are things that you should be putting forward. You get your mark. Don't just say that sales margin increase in 2023 by 5%. We know we've seen the figure that is going to increase. What actually caused the increments? Oh, it is caused by probably inflation rates. It is caused by like increase in cost of material. It is caused by a hair. You begin to state those reasons, even though you are not sure. So just say it, then advise. Moving forward, management is advised to get loan in order to push up his profit, blah, blah, like that. So that's how you answer case studies question. Actually. So exam is straight if you know your way. And I still here.
Yes, sir.
Yes.
Conclusion.
Yes, sir.
Mm. So this does not mean that this is what you are going to write in your own example. I'm just trying to give you possibilities, right? Possibility, what can actually happen. So, so conclusion now. Based on this is what you are going to write. Based on the
So
MPV.
we can't see your screen, ma.
Eh, okay. I'm coming. Just a minute, please. Wow. Mr. Ahmad, are you there?
Yes, I'm here, sir.
Okay,
Well,
based on hmm, the projects, the projects should be what? The project is not viable, right? It's not what? Viable. Hmm? And should be what? Rejected normally. Hmm? Because it destroy it destroys what? Value. Hmm? However, if let me just go straight for management may still consider it only if there are overriding strategic, you shall know the strategic reason now, or what? Compulsory reasons. Are we on the same page now? So this is what you are supposed to write in one word. Do you get class?
Yes, sir.
Or I should give you another format.
Yes, sir. It's okay.
So if
Okay.
there's another one, else in case we don't remember this one.
The one that is in my mind is also long.
Okay, then leave this one.
Madapa. So that's it.
So,
So what about B? B is saying what?
hey, are we continue?
Sabi is saying tomorrow we'll continue. We have 7 a.m. class tomorrow, sir.
Thank you very much.
Now you want
It's okay.
like what's all this? No, I cannot sleep again. I should
And that's all we care about. You want you to rest. But if you still want to, no problem.
So B is saying that
Sir,
hmm?
B is saying that good morning, sir. We should go and sleep.
Abuchioma, please scroll down a bit up then a bit.
Where the note the Excel page or where?
Yes, to the no, this page that you are. This Excel, yeah, is okay. Mm, no, to the
Okay,
conclusion part.
allow me, thank you. So
Yes.
I've sent the alternative conclusion to you. So in case you don't want to use this short term, you use this long one. The project has a NPV of 72, which is negative, which indicates that the present value of expected inflow is less than the cost of what investment. This means the project will reduce shareholders' weight if undertaken. Therefore, the project should be was rejected on financial grounds, right? However, management may still proceed if there are overriding strategic, statutory, qualitative reasons, such as please include this in your note too. Regulatory compliance, market entry, or protection of existing blah blah blah. In such a case, effort should be made to review assumption, cut costs, or explore incentive that could improve the project viability. Thank you, Mr. Chairman.
You're welcome, sir.
Do you get it, sir? So these are things that you can actually consider.
Yes, sir.
Right now, my email fine. Uh, Allow me, thank you very much for sharing this. Are you a teacher? Why are you using red pen? Do you teach?
I'm not a teacher. It's Mori Nimolo, sir.
Mm-hmm. How can I be buying red pen?
Sir,
How come you have red pen with you?
I
Make I have it.
pick it from the part of the pen bought from the office.
Do you work in an audit firm?
No,
How do you know how red pen?
anytime the company wants to buy a pen, we do buy blue, black, and red. I just want to use red so that nobody else will help me to share it or
Okay,
collected it from me.
okay. Let me end the recording then. I think.
Yeah.
Thank you,
So
sir.
if you don't understand any part, please reach out.